Good morning, everybody. I want to very warmly welcome you to the IMF's Governor Talks. Today, it's my great pleasure to welcome Governor Moses Pelaelo, Governor of the Bank of Botswana since 2016, a longtime collaborator and counterpart with whom we've had many an exchange. Governor Pelaelo, I'm going to jump straight into asking you some questions, but warm welcome and thank you for agreeing to do this with us. Of most concern globally in recent months, of course, has been inflation. It's accelerated around the world, including in many of our countries. And you've decided to, after tightening policies, to go on a pause. And that has helped, but even before that, you had, done a decent job of containing inflation. Can you tell us how you were able to contain inflation and limit it as much as you have and get it even below your target?
Thank you very much, and good morning to you all. Abi, let me thank you very much for this opportunity to say a few words about what we are trying to do in Botswana. But I must say that nobody is going to suggest that aggregate demand management is a very easy thing. These are very difficult times indeed. And so in the context of Botswana, first, I think it's very important to understand that our primary objective is really price stability. And of course, we define that as a sustainable level of inflation that is within 3 to 6% medium-term objective range. And we have a medium-term forecasting as the primary role. So indeed, we experienced a huge shock in 2022, and inflation peaked at about 14.6%. And it was projected to remain above the 3 to 6% in the medium term. So what we also saw that inflation expectations were also going to be higher than what we wanted inflation to be. So in that context, we decided to increase the policy rate. We call it the monetary policy rate, cumulatively by 151 basis points over time. And of course, this was to anchor expectations, as I said. But of course, we did pause, and you rightly observed that we paused. And the reason for that is that there were several things to take into account. First, I think the deterioration in the inflation profile and the expectations really had to do with the supply side shocks. But if you look at, for example, the output gap was very much negative. And in any case, in the context of these supply shocks that you know about globally, regionally, and elsewhere, there is very little that monetary policy action in itself could actually influence that. And so that is really the most important thing. But of course, also we implemented monetary policy to safeguard the financial stability. And that's another important issue to bring in. So, I mean, if you could just a little bit more granular, if you look at the inflation in Botswana, this was driven mainly by adjustment of what are called administered prices. And these constitute about 33% of the CPI. And so there were a lot of adjustments.
What kind of prices are we talking about? Administered?
This is fuel.
Fuel prices?
Fuel prices in the main. And I think that's about 10% of those administered prices that I talked about. So those really were the ones that were responsible for this. There was also domestic resource mobilization, lots of prices that were suppressed for some time, and these were adjusted upwards. And so that's also obviously caused a problem, inflation.
So the fact that inflation has come down as low as it has now, how much was it due to policies having been tightened enough, as you said, to restrain demand, versus just following this decline in oil prices that we've seen?
I think you have to obviously look at several things. First of all, I think there were important issues around the monetary policy action itself, but also there are a number of things. In response to the COVID-19 shocks, and in order to ameliorate households in terms of cost of living crisis and so forth, government did adjust some certain things. For example, VAT was reduced from 14% to 12% for a period of about 6 months. There were also certain zero rating of certain items, and that helped on the inflation side. So that also did that. But also, monetary policy had an impact in terms of demand management and so forth. So quite a number of things. Finally, I think the base effect as well. Some of these changes happened 12 months before, and therefore they were washing out of the inflation calculation.
Thank you, Moses. If we talk about policy coordination, I think a unique feature that you have is, of course, you have a crawling peg. If you could say a little bit about that. But as importantly, the tension between monetary and fiscal policy, and as you've been trying to calibrate monetary policy setting, paying heed to fiscal policy to get inflation under control.
Thank you, Abi. This question of tension between, on one hand, monetary policy and exchange rate, and on the other hand, monetary policy and fiscal policy always come up. And it's very interesting that it's looked at. But let me say, in the context of Botswana, the first issue that we do is really starting with the policy design. It's the institutional relationship, the way we relate to each other in terms of the agents that are involved, but also in implementation. And so if we look in the policy design, for example, while not necessarily going to consult each other in terms of the action to take, but it's important to have transparency, to have predictability and consistency in policy making. And to the extent that these things exist in the environment, you tend to manage those tensions particularly. If you take the exchange rate, for example, we have a crawling band exchange rate regime, and we use the crawl, the rate of crawl, to be able to make adjustment between inflation differentials between Botswana and trading partner countries. Uh-huh. And we define this very, very carefully to mean South African inflation plus the SDR countries, which is our trading partner countries. And we look at the average inflation outlook for those countries, and we take the inflation objective for Botswana, we take the differential, and that is what we do to adjust the exchange rate regime. We have 45% South African rand in our exchange rate and 55% SGR. It's in a managed exchange rate. But the flexibility that we require is really to account as a proxy for productivity differential, the inflation between our trading partner countries. And that's what we focus on. Now, here's the tension. Clearly, the real objective of the exchange rate is to support the competitiveness of the domestic firms in international markets, mm-hmm. so in the exports and so forth. And so clearly what you want to do is to make sure that you don't have a real appreciation of the real exchange rate, the real. And so that's becomes very important and to look at. But at the same time, for example, if inflation is a problem, the rate of crawl could also be a useful tool to try and adjust to make sure that you do that. And that can be an issue sometimes.
One of the challenges of having a crawling peg, of course, is the concern that it doesn't provide enough of an anchor, and that you'll be chasing your tail as inflation accelerates and you depreciate more. So my sense is that the way you're mitigating that is by targeting forecast inflation rather than looking backwards.
We definitely forecast inflation, yes. It's the medium-term inflation over, say, 18 months period. And we try to really be very careful to make sure that the construct of what we are trying to achieve clearly is what we are focusing on. But of course, we're also aware that our real monetary conditions in Botswana, the index, is going to be affected by the interest rate gap and the exchange rate gap. And so that too is something that we focus on a lot of times. But I also wanted to say a few words about the tension between fiscal policy and monetary policy. And that too can be a problem. I'm thinking about the volatility and the inflation profile that was deteriorating in 2022. government, naturally, their response is to support the households by fiscal policy being expansionary and so forth. And that's the time when monetary policy is trying to be contractionary because inflation is high and we had to tame the inflation. And so that can cause a tension. But the good news is that, like I say, in the policy design, yes, we are independent central bank. We have independent monetary policy, and so we do work. But we understand what government is doing as well. So we factor in the fiscal in our inflation forecasting.
Thank you, Moses. One of the unique things about Botswana, of course, is the fact that you're very, very heavily reliant on diamond exports in particular. Tell us about, the challenges of calibrating monetary policy in a context where we sometimes have quite a bit of volatility, or perhaps even secular decline in the most important export product that you have.
Thank you very much for that question. Indeed, mineral production and diamonds in particular are very important for Botswana economy. And therefore, this whole question of commodity prices, and as we all know, they are very volatile, and that can present a challenge. But for Botswana, the governance architecture that we put in place to deal with these issues have really been very helpful. First and foremost, I think it's very much prudence in terms of our fiscal rules. This was very critical. And so one of the rules that we had was that the bulk of the diamond revenues had to be used for development. So basically, you basically come up with a fiscal rule that what you extract from the ground is going to be very much generating growth and be spent on infrastructure, education, health, and those sort of things. And then you become really deliberate and focused and very disciplined in terms of the approach. And so you come up with lots of things that are going to make sure that you deal with that. And that's why, unlike elsewhere, where there had been problems of resource cares and so forth, in Botswana, we are able to mitigate this very, very carefully to make sure that in the fiscal policy, we have expenditure rule, we have fiscal rules, we have debt limits and so forth that are very tight and control us to make sure that we just don't consume everything that we extract from the ground, but we also save for future generations.
So these fiscal rules, how much are they motivated by near-term cyclical considerations versus actually taking into account structural issues like implementation capacity?
Well, yes, implementation capacity is an issue, but it's the development, national development plans, and what we are trying to do in terms of fiscal sustainability. So that is one of the key ones that come in. But of course, the reason why we have had many surpluses in Botswana, fiscal surpluses, is part of the implementation capacity issues that you are raising. Yeah.
I'm going to turn to the audience if there are any questions in a minute. But one last question for you, Moses. These days, the mandate of central banks in our countries, in our region also has expanded somewhat. Yes, inflation remains, of course, the primary consideration, but central banks are, as they're pursuing that target, having to think about things like inflation, inequality. Can I ask how you go about internalizing those kind of considerations in policy making at the Bank of Botswana?
Yes, this is quite a very important question. And central banks are often asked these questions in terms of these long-term structural issues, whether central bank policy, monetary policy, and so forth can impact things like growth, unemployment, inequality, and so forth. Let me state for the record that some of the endemic problems that Botswana faces, the first one is narrow economic base, predominantly dependent on minerals. The second one is high levels of unemployment, currently around 25.4%. And if you take the youth one, it's much higher than that. And then thirdly, this question of inequality. And so these are real problems for us. And therefore, it is important as a central bank to think about what can a central bank contribute in terms of these long-term structural problems that we have. I always argue that the fact that we can contain inflation and have a very successful monetary policy and have stable macroeconomic environment, stable financial condition, you are contributing. You are contributing in a big way. Because without macroeconomic stability, without financial stability, it becomes extremely difficult for investments, for all kinds of economic activities, to be able to plan, to be able to understand what is happening. And so that is an issue. So yes, monetary policy can have distributional effects, and some of those issues can be dealt with. But we have to have the right tools and use the tools that are available to us. Some of the tools that we require, for example, to solve unemployment, growth, and inequality and so forth, do not fall within the mandate of a central bank. But that does not mean we are helpless. Macroeconomic stability is the oxygen that you need in the economy. It's what you need. The predictability of prices in society is what investors look for in terms of doing their cash flows. And so these are important ingredients of issues that central banks do contribute by ensuring that inflation continues to be low, predictable, and clearly contained within the objective range, in our case, 3 to 6% in the medium term.
Let me push you a little bit on that. It's not so much that, I think everybody agrees in the beautiful phrasing that you said, macro stability is the oxygen. Without it, not much else can flourish. But the question is how quickly you get to the inflation band. You can delay it a little bit if you see a trade-off. Is it that you don't see any trade-off, or you think getting to the inflation band quicker would be more important?
I always remain laser focused on what I need to do. And for me, yes, these are important questions in terms of trade-offs. But if you look at, for example, what happened, post-COVID and so forth in Botswana, many people thought that we should have raised policy rates several times, more than what we have done. But we are very careful. We have a balanced approach to understand that the output gap remained negative for a very long period of time, but you had inflation. And so we had to do what is necessary to be able to put ourselves in a footing where we can say, look, we are not hitting growth, we are not hitting other macroeconomic objectives in the country, because in the horizon, our focus now was that inflation was going to come within the medium-term objective range of 3 to 6%, as it is now about 1.2%, in fact, below the target of 3 to 6%. And so that is that. Of course, there is an issue. Immediately, I must recognize that with what is happening globally, particularly the focus of the El Nino, and in the context of a semi-arid country like Botswana, we are likely to have problems with food prices going forward. And in the region, rainfall patterns have been very unreliable and very erratic. And so we think that, for example, the coming year is going to be another drought year for Botswana. And of course, if we don't have that, crops and failures, and with climate change as well, we are going to have all kinds of difficulties. So we can see inflation now coming back, and we need to be ready to respond in a particular way. But of course, the question that you raise around trade-offs becomes extremely important. But I think everybody needs to understand what their lanes are, what their parameters are, what tools they have that they can use as levers to be able to influence economic conditions. I think other people must come to the party. In our case, we always say to government, you have a role. We also say, particularly in terms of structural policies.
Of course. Last question, we're running out of time, Moses. I know something dear to you, and I think we've seen it in Botswana and many other instances, is maintaining strong macroeconomic institutions. You spoke about the fiscal anchors you have, the fiscal rules you have, but at the central bank also, you've been passionate about keeping the institution quite strong, adopted rules that, adopted policies that constrain discretion somewhat, and also development of staffing. Can you tell us a little bit about how important having a strong institution is in terms of policy implementation?
Yeah, I missed the first part, but let me say that, the credibility and the integrity of a central bank is critical. And so the institutional design and frameworks that you put in place and the governance architecture that you have as a central bank and as you interface and relate to other public agencies are very crucial. You know, credibility is everything in fighting inflation. Credibility is very important in terms of financial intermediation, for example, and growing the financial sector. But also, remember, Abi, that we also manage the foreign exchange for the Republic of Botswana. And so as a result of some of the prudent policies that I've talked about, we had accumulated large reserves in the past. I mean, 10 years, if I was talking 10 years or 15 years ago, the reserves were as high as 27 months of import cover at some point. But we hit the global financial crisis, and we then draw down on those foreign exchange reserves. And that came down to about 14 to 15 months of import cover. After COVID, we had the fiscal space, we had the monetary policy space, and we were able to respond appropriately to assist their citizens when there was no economic activity whatsoever. So the government was able to draw down on the government balances at the central bank and be able to support the citizens and firms. Things like, for example, 50% of the wages for some of the firms in the tourism industry and other selected industries were supported. And that was possible because of the creation, those fiscal anchors that I talked about, the fiscal rules, the buffers that had been built in terms of the foreign exchange reserves. So we drew down on our Pula Fund. We call it the Sovereign Wealth Fund is called the Pula Fund. We drew down. Currently, our foreign exchange reserves about 9 months of import cover. But in terms of our history, that's probably some of the lowest levels that we have reached at about $5 billion at current numbers.
Still 9 months of import cover, right?
9 months of import cover.
And split equally between the Pula Fund and more usable reserves, right?
No, the primary international reserve, which is like our current account, is about 3 months of import cover at the moment, and the bulk of the money is in the Pula Fund.
Okay.
Yeah.
Thank you so much, Moses. I'm going to try and see if there's anybody on the floor that has a question for the governor. And yes, sir. Somebody with a mic will come. If you could identify yourself and any institution you're affiliated with.
Thank you very much. My name is Echo. I'm a correspondent of Bloomberg. Governor, recently the IMF had cause to say that your independence was somewhat, I say use the word fragile, especially given the influences you have on the key rates. How do you address that? And on the Pula Fund, you also said you plan to expand it. What other scopes are you trying to cover with that sovereign fund that you have?
Thank you.
Want me to go?
Yes, please.
Okay.
There for you.
Yeah. No, thank you very much. Independence. Are you talking about the central bank independence? And somebody has questioned the independence of. We recently had a major legal reform in our legislation. So while we have enjoyed a de facto independence for several years as a central bank, it's now entrenched in law. We are de jure independent central bank. And so we pursue monetary policy without interference of anybody. And in coming up with these policy rates, while we bring in our forecast all kinds of things, including, of course, like I say, the fiscal path and so forth and balances, but we certainly are focused on the mandate of the central bank without any we don't worry about independence in Botswana. I think maybe what you read was in the area of banking supervision, where there was an assessment against the Basel core principles, and I think the assessors felt that we are not sufficiently independent from a supervisory point of view because there was a role of government in our act. But we have since amended that act, and we now have a new act. So that's that. On the Pula Fund, remember the current legal regime that we have sees the creation of the Pula Fund as a residual amount of foreign exchange reserves that are not needed in the immediate term. So we have a corridor that says we need to have 3 to 9 months of import cover in what we call the primary international reserve. So any excess outside the 9 months of import cover, we put it in the pooler fund. But if we have difficulties and the international reserves falls down below 3 months of import cover, we draw down from the pooler fund. And so the pooler fund at the moment is currently used as a stabilization fund. What we are trying to do now is to see if we can have intergenerational equity brought into this framework and ring-fence the pooler fund such that it's not only a stabilization fund, but also it's a huge investment for the future generation. So we are coming up with rules, withdrawal rules, additional flows into the pooler fund, and make sure that it becomes extremely difficult for government to draw down, except to live out of the income streams, more or less similar to what you have in Norway or in Singapore. And so that's the direction where we are going. I hope that answers your question.
This has broad political support?
It has broad political support, yeah. It has broad political support, yeah.
Thank you. I think that's all we have time for, and we're going to wrap up here. Yeah. Governor Pelalo, thank you so much, Moses, for coming and sharing with us your thoughts, the challenges you face as a monetary policymaker, but challenges you've clearly overcome, and kudos to you and the Bank of Botswana on fantastic management of your economy.
Thank you very much. Thank you very much.